Sometimes you got to find an extra couple $1,000s for those Taylor Swift tickets, right? I guess they're going on plastic. Abigail, thanks very much for that. Levi's shares sink to a record, I should say, at the open as well. Bloomberg's Natalia Knijevic joins us for more. Do they get right? They sink at the open to the biggest drop that we've seen in Levi's.
They were down on pre-market by 8%. Now they're down by 15%. It's really interesting because sales missed just slightly. At the same time, EPS came above expectations. Maybe expectations for this earnings were too high. The stock is up by 40% year to date. Last time when the company reported earnings, they increased guidance for EPS. This time around, they didn't change guidance, and wholesale business is down globally by 4%, and it represents about 40% of companies' revenue. Citi analysts are saying that this type of business revenue segment is holding the company back. At the same time, direct-to-consumer sales are growing really quickly globally. They are up about 11%. What's really interesting is that Levi's products, only about 40% or less are for women, but this category is growing much faster than products for men. So women's department increased by 20% during the past quarter. Sales for men's products are up just by mid-single digits. And Matt, this is important. Denim is a huge fashion trend for 2024, and not just jeans, it's top to bottom. And Levi's is saying that sales of those outfits,
Jay Leno thing,
exactly.
Denim shirt. And when I was a kid, Natalia, Levi's was kind of the only thing out there. I mean, if you're going to save money, maybe you would go with Lee or Wranglers if you're kind of on the farm. But for most people, it was ones. And now there's so many other choices in that segment. It's so crowded.
Exactly. I have to say, when I came to the U.S., the first purchase I've made was a pair of Levi's jeans.
Good for you. That's American. Got some Levi's jeans, went to a Yankees game, had some apple pie. No?
That's my next goal.
Okay, we'll take you to the game. Natalia Knijevic, thank you so much for that. Micron, really, I think the big earnings story, failing to live up to lofty expectations of at least some analysts, certainly of the AI big bulls in their latest report. Bloomberg's Isabel Lee joins us for more on Micron. Isabel?
Hey, Matt, it's really all about the lofty expectations. Day in and day out, investors are looking for that big payout. Micron is one of those, the latest, that investors aren't really happy with. We have shares falling around 6%. The company reported fourth quarter sales to be around $7.4 billion to $7.8 billion. So this is well below analyst estimates. In fact, some analysts were expecting $8 billion. We have profits, though, slightly higher than expected. It's $1 a share versus the $1.02 estimate. So the thing is, yes, Micron is getting a boost from the whole AI mania we're seeing, but sales are still sluggish, especially when it comes to PC and their smartphones. So those are only beginning to see the recovery from last year's historic slump. So lots of eyes are on Micron. It is overall the largest U.S. maker of computer chips. But still, it has been one of the biggest beneficiaries of AI. It's up 70% year to date. But this is just a fresh reminder, Matt, of how vulnerable this AI rally is. Some are calling it to be a bubble because this comes just days after NVIDIA wiped out around $500 billion in market value. But we do have the CEO reiterating that 2024 will see a recovery and 2025 will see record sales. So you see that optimism still is there, Matt.
Yeah, a very interesting roller coaster ride to follow indeed. Isabel, thanks very much. Bloomberg's Isabel Lee talking to us about Micron and the AI craze that's given up the ghost a little bit in the past few trading sessions. Will that continue today? Joining us to talk about it is Lee Farage, State Street Global Markets Head of Multi-Asset Strategy. And Lee, of course, we're going to talk about a lot of other stuff as well, not just AI. But you can't ignore what some have called the most important stock in the world. That's NVIDIA. The others that, have gained on the AI craze, hardware and software, data centers, energy producers. Think about all of this. Is it here to stay, or is it like the dot-com bubble where, we're using the internet for sure, but the stocks are just overvalued and need to retrace some of their gains?
The difference between now and the dot-com bubble is the companies now, they're making money. If you think back to the dot-com era, those companies weren't making money. They didn't make money for years. The ones that survived are now very successful and very big companies. The ones we're talking about now with AI, they're making money, they're printing money every day. So there is a big difference. Look, valuation stretch, we know that, but it's sort of, we don't know how big this thing can be. And until we do, And I think, these stocks are going to find support. And whenever you get any dips, you're going to see buyers come in because the longer trend is still in favor of the AI revolution.
It's a good point. A lot of people have been saying investors were waiting for an entry, and if you loft off $430 billion from NVIDIA, that sure looks like one to me. Although we heard from Goldman Sachs that hedge funds were selling tech aggressively, retail investors were piling into the ETFs. Is it a little scary when the smart money is selling?
Depends which you define as the smart money.
I know.
It is, but I mean, I think, again, the valuation argument has become very strong for them in terms of, it's overvalued. They've had a very good run. But as I say, there are still some very, very successful investors who are still buying these stocks, and I think will continue to buy. So I'm not that worried about it. The stock market generally comes down. I think you're going to see these AI-related stocks still outperform. Demand for their products is pretty inelastic, even in an economic slowdown. Everyone wants to be in this market. So, they've got huge capital, so higher for longer on rates. They're going to make money on their interest. So, they're insulated from a large degree from the economy. So I think they're going to continue to outperform.
I was listening yesterday to Masters in Business, great podcast that Barry Ritholtz does, and last year he was talking to Tom Wagner about the early 2000s when telecoms were laying down fiber for like thousands of dollars on the mile, and eventually they sold that for pennies on the dollar, right? But thank goodness that capacity was there because the internet needed it. Is that what we're seeing now, you think, in memory or some of the other picks and shovels that are needed for AI?
In terms of putting the groundwork in for what we need? Yes. Yeah. I mean, I think that's exactly what we're seeing.
Paying way too much to put the groundwork in. Are investors, a little bit exuberant here?
And there will be pockets of there will be companies that don't survive. There will be those that don't turn a profit to the degree that people expect. But then, you will have companies that the Amazons of this world and others that are hugely successful over the longer term. And it's a question, you're not going to pick all the winners. Yep. But you want to have a bunch of so that if you get the winners, they're going to really offset anything you lose on, quite honestly.
Good point. We were talking about you coming on earlier and saying you think we're going to hit new records in the stock market. You also think that inflation has some upside risk. Something we heard from Mickey Bowman as well a couple of the past few days. How do you square that circle? I mean, if inflation has upside risk, doesn't it mean less likelihood of cuts and, more pain for the stock market?
It's a timing thing. My call for fresh all-time highs is in the next month or two. So July and August, I think we're going to have a very quiet summer. We'll be interspersed with volatility around the French election or anything political here. But overall, what the Fed has done, they've told us they're not doing anything until September, right? So the July meeting is a dead rubber now. That's 3 months. We have 3 rounds of data before then. The market's not going to be spooked by anything over the next or so, I don't think. We have ample liquidity. We have investors who want to buy. That's going to mean, the drip fire in the market that we've seen for so long, there's no reason for it to come to an end over, during the course of July and August.
You're the second person on this program to call summer doldrums.
Yes.
And, there's a function on the Bloomberg SEAG, which is a seasonality chart, and I look at that for the S&P 500, and I see going over the last 10 years, the last 20 years, July is a great month for stocks. Yep. Does that you?
This month, I think it does, yeah. As I say, there's nothing to upset the positive move around the Fed. We're not going to change our view on the Fed before we get to September, really. The market's going to between 1 cut, maybe 2. You're seeing very narrow ranges on 2-year yields, seeing very narrow ranges on 10 years. And that sort of stability in the rates market is great for stocks. So, yeah, I do think we're going to have a good July, maybe not as good as some of the ones in the past.
It's been, I'm looking at the screen now. Yeah. Last year, we were up 3.1% in July. In 2022, 9.1%. The year before that, 2.3%. The year before that, 5.5%. We haven't had a down month in July 2014.
Yeah. I mean, they're thin markets. There's less volume that goes through. But 3% this July, easily achievable. Yeah, I don't think we'll get 9, but I think 3% is easily achievable, which takes new all-time highs.
What do you think about the divergence that, yesterday the dollar hit a fresh high for 2024, and the talk is of, if the Fed doesn't cut rates until, as you said, September, people are saying even later.
I don't think they'll cut in September. Just that we won't see anything in terms of changes in view on the Fed until the September meeting.
When do you think they're going to cut?
I'm not convinced well this year, quite honestly, because as you mentioned before, I am of the opinion that there are upside risks to inflation in the second half of this year. I think the labour market is still tight. I know you're seeing some weakness around the edges, but look, we have a labour force problem. We have a shortage of workers. It's demographics. Baby boomers are retiring. We're not replenishing the workforce to the greater degree. So that's why we have a shortage of workers. That keeps wage inflation high. Housing market, we have an inventory problem. 50% of mortgages in the US are 3% or less, 30-year fixed. The average outstanding mortgage rate is 4%. No one's moving. No. You're not going to move a 7.5%, 8% mortgage. Exactly. So there's no inventory, and that's supporting house prices. So this idea that we're going to see the shelter component of CPI come down in the second half of the year, I think the risk is that actually starts to move back up. If you look at it, lags house prices by about 12 months, and house prices bottomed last May. Moving up since then. So those factors, to me, the risk is that pushes inflation higher, lower.
And keeps the Fed standing pat. And do you see that divergence then? The ECB wants to cut, the BOE wants to cut. Do you see that divergence really offering opportunity?
I do, because if you look at the market, you look at the rates market, one-year pricing, we're basically pricing the same amount of for the Fed as we are the ECB, the Bank of Canada, slightly less for the Bank of England. So the market's got about 4 in over the next year for all of them. That doesn't make any sense to me. When you look at US growth, close to 3%, you look at Europe, you look at the UK, close to 0. I can see why they're cutting. They've got high wage inflation, they've got a demographic problem as well, but they're growing below trend. So that, by definition, creates slack in the economy. They can look ahead a couple of years and say, that's going to raise the unemployment rate, that's going to bring down inflation. The Fed isn't there yet. We're still growing above trend, and the problem with that is that means you can't cut rates. And confidently, and they keep saying being confident, that inflation will come lower to their 2% target.
Absolutely. Great conversation. Thanks so much for coming. Really appreciate it. Lee Farage there from State Street. Coming up, Micron fails to live up to some of the last year expectations.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast.
We'll take a closer look at the chip maker next. This is Bloomberg.
I think married to Robert Kardashian. Entrepreneurs and people running just often pay amazing education. I was situation, but at the same time realize we're happy so many times that I had learned from. That way.
Shaping the C-suite. Breakfast cereals. On efficiency. Crunch numbers are future officer. Resource 24 hours a day.
People ask me all the with and work with investors in the world.
Exploded at the private credit, particularly.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast for Micron. So it's just a game of being patient 1 or 2 more quarters.
Micron is selling off this morning after failing to meet Wall Street's higher expectations. Some investors were expecting a bigger payoff from the AI mania that has swept the market, but it's fair to say that Micron actually met the average estimates. They forecast sales between $7.4 and $7.8 billion, and the average estimate was for $7.58. They showed earnings in their forecast of 108 a share, and the average was for 102. So why are they off 5%? Let's ask Bloomberg Technology co-host Ed Ludlow. He is in San Francisco. And Ed, I guess the idea, you just have to be in NVIDIA right now. You just have to really beat expectations by a mile.
It's really interesting because in many ways the fate of NVIDIA and it up the sort of deployment of its new products directly correlates to Micron. If you think about a server, you have trays of components, and in one tray you have the GPU or AI accelerator from NVIDIA, in the first instance the H200, and around that 200 you have 8 of Micron's HBM3E, high bandwidth memory chips. And so like when you think about the big picture of what's just happened, the investors are kind of looking at the numbers and saying, oh, we thought it would be more quickly. But in their defense, Sanjay Mehrotra, the CEO, did actually give us more data than I've seen him ever give before in how that product is ramping up. Revenue is going to be this quarter, the current period, moving into the next fiscal year.
By the way, I kicked off my career here at Bloomberg about 25 years ago as a tech reporter, a print reporter, covering Micron as a maker of DRAM, which is like a commoditized version of memory. You've schooled me recently in the new, which is high bandwidth memory. Talk to us about the products.
So high bandwidth memory is basically DRAM in multi-layered form. Think of it as a cube. If DRAM with about 3 gigabytes of memory is a thin square, you stack in the first instance 8 of them on top of each other. 8 times 3, 24, you get 24 gigabytes of memory. And high bandwidth memory is really important in the AI context because when you're training a large language model, how quickly you can access a pool of data directly relates to how good that large language model is. In other words, the latency of calling on the data and getting a result both in the training and inference side impacts performance. The design of stacking DRAM one or the other just makes it very quick. It reduces latency and you can get data in higher volumes instantaneously. And it's a competitive market. Micron's done really well to get in with NVIDIA and partner themselves in the H200 product. But SK Hynix is doing really well in that field. In fact, the laggard is probably Samsung, but all 3 of them are gunning for this market. And whatever comes out on top, you know, it's not as commoditized or cyclical as historically is in the context of mobile phones or personal computers, things like that.
All right, Ed, I'm going to keep watching your show so I don't have to research this stuff myself. Bloomberg Technology co-host Ed Ludlow, he co-anchors that show. Caroline Hyde starts at 11 a.m., a show that you don't want to miss if you care about participating in the revolution. Now, for some of the sector price action that we're watching this morning, let's get to Bloomberg's Abigail Doolittle. Abby, what do you see?
Another really interesting sector day from the standpoint that we have the S&P 500 down fractionally at this point, probably trying to flip higher, but most sectors are lower. Financials down 0.4%, even as all the big banks pass the Fed stress. Materials, healthcare, but small losses. To the upside, though, communication services, of course, those mega cap tech sectors, energy and real estate. If we take a look at the banks after those stress tests over the last couple of days, we are seeing a bit of a decline here, down about 2%. That KBW Bank Index down 2% over the last 3 days, Matt.
All right, Abigail Doolittle, thanks very much. Coming up, we're going to give you the market-moving events that you need to be watching this week. You can bet inflation is one of those. Next in our trading diary, this is Bloomberg.
Orders in New York.
News, data, context, change. July 4th. Voters had coverage leading up to the election. Tune in for
Here's what you need to be watching this week. We're going to get pending home sales at the top of the hour, so type EcoGo for that. Then a Treasury auction on $44 billion of 7-year notes this afternoon, plus Nike reporting earnings after the bell. Tonight brings the first debate between President Joe Biden and former President Donald Trump, and then we'll round out the week with the all-important inflation reading. The Fed's preferred gauge, PCE, comes out tomorrow. It's one that you don't want to miss. This has been the Countdown to the Open. I'm Matt Miller. This.
Climate change.
Significantly increase. So wildfires, far more events.
Climate change. Projection of the future.
And what we do a lot, we work a lot change will mean than we used to take, because
insurers are not claims.
it creates the awareness to do it becomes more around preventions.
Of Hollywood.
Bloomberg Rio.
All right, we are 30 minutes to the U.S. trading day on this Thursday, June 27th. Here are the top stories we're following. Sky-high AI expectations send Micron shares plunging after the memory chip maker's outlook failed to impress Wall Street. M&A in the packaging biz. We're going to be speaking to Sonoco CEO Howard about the company's $3.9 billion acquisition of Eviosys. It is the latest a flurry of deal-making in the packaging industry. And Korean comics in the U.S. Online comic company Webtoon raises $315 million in its U.S. IPO. We'll discuss CFO David Lee in just a bit. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. To take a look at markets at this moment, another quiet day. Of course, the S&P currently higher to the tune of about 0.1% or so. We are hovering near highs, but it's gotten very quiet at the benchmark level. Of course, at the single stock level, things are much more exciting, which we'll get to in just a couple of minutes. But you take a look at the NASDAQ 100, a little bit more signs of life. When it comes to your big tech stocks, the NASDAQ 100 currently higher by about 0.3%. All the way have that bond market rally continuing to build. The 10-year Treasury yield currently lower by about 5 basis points right now. Of course, could all change again tomorrow when we get those PCE numbers. But for right now, one stock that we're watching is Walgreens. It's hitting its lowest level since 1997 after its profit forecast for the full year. And I'm pleased to say that joining us now with more is Bloomberg's Fiona Rutherford. This is the second time in a row that they've cut that outlook, Fiona.
Hi, yes. This is the second time that they've lowered their guidance, their fiscal year guidance. It really just shows how tough the retail landscape is right now. Less people are going into retail pharmacies for things like candy, school supplies. They just want to go into the pharmacy and come out. And so Walgreens is really having to rethink their store footprint, close stores that are no longer profitable.
And it's interesting. I mean, you just see the share reaction, and it's brutal. It seems like, at least taking a look at that Wall Street doesn't have a lot of faith in this turnaround plan, which, of course, will take years to really bear fruit.
Yeah, I mean, and that I've spoken to, I think they feel the plan is solid, but investors may just be impatient. They would probably prefer a quicker turnaround. And also, an analyst from Bloomberg Intelligence said to me earlier today that the excitement around new CEO Tim Wentworth has probably dissipated now, and it's really starting to show the cracks in the company business model.
Yeah, and you can definitely see that in the share price right now, currently down about 23% or so, Rebecca, or rather, I know you have a very busy morning, so appreciate you taking a couple minutes for us. That is Bloomberg's Fiona Rutherford. And joining us now is Rebecca Patterson, to be specific. She is former Bridgewater Chief Investment Strategist, joining me on set. Great to see you in person.
You too. Good to be here.
Let's talk about the state of risk appetite at the moment, because it feels like every day I stand up there at 10 o'clock and I talk about these quiet in the market at the benchmark level, but still we're close to all-time highs. I mean, how much legs left does this rally have?
I think a lot of it is going to come down to what happens on inflation, so how quickly can the Fed start easing, and then what happens to the high consumer. And I mentioned the high-end consumer specifically because there has been a big bifurcation in consumption in the economy when we know consumption is really the key to the economy given that it drives about 2/3 of growth. The lower-end consumer basically has spent down savings, increasing reliance on credit cards, and is getting hit harder by the cost of living increase we've seen in the last few years. The higher-end consumer has the share of wealth thanks to equities in homes. They have more ability to spend. They have more confidence. So as long as we keep ticking along and spending, then I think we're okay. And with that soft landing view can track, that will hold stocks. If the high-end consumer pulls back, if we start seeing that in the data, then I think we have a great risk that the slowdown could happen more quickly. Again, the Fed could ease, but we're going to lose that support earnings to a degree.
Yeah, it's really interesting. And I mean, it's the cold reality, as you lay out nicely, that even though you said the lower income consumer is tapped out, you take a look at the high end consumer still hanging in there, and things will probably be okay if you take a look at least at the equity world. But talk to me a little bit more about the Fed and what your expectations are there. Of course, we're 3 months away or so from potentially the first rate cut. How much does that really matter, though, when you think about the stock market? It seems like we've been doing just fine, even with those expectations pushed out.
Right. So it's the two levers that we're talking about. It's the discount rate, right, that factors into equities, and that's going to be based on the Fed funds and how quickly they cut. It's going to be the earnings that are coming from the consumption and the demand. On the Fed side, I think they view the still today as asymmetric. If they start easing soon to help that lower-end consumer, the risk is that they overheat the economy by lifting what is an already strong higher-end consumer market, the service sector, equity prices, service spending, things like leisure and hospitality. And if they overheat the economy, inflation ticks higher again, then they have to raise rates, and that's the last thing they want to ever face. So I think as long as growth is holding up okay, and still unemployment, it's ticking up a little. We saw that in continuing claims this morning, highest level, I believe, since 20 now. So it is something to watch, but we still have a pretty strong labor market, so they can take their time. So I think 2 rate cuts priced in is reasonable, and my bias would be it happens later rather than sooner, barring a big fall in inflation. So I do think they're going to be cautious on that. In terms of how much matters for the markets, again, even if the Fed is higher for longer, as long as that high-end consumer holds up, I think we can muddle through at a minimum with stocks.
Well, Rebecca, I'm really curious to hear your thoughts on actually a thesis from Rick Rieder that basically to cut inflation, the Fed should cut rates here. You think about the wealth effect that's particularly coming from cash right now. You can earn 5% just by doing nothing. And that's certainly made people feel a bit wealthier, of course, that what's going on with their money market funds is actually producing significant amounts of income. How much does that narrative hold water with you?
I mean, I have so much respect for Rick Rieder. I think he's brilliant. At the same time, I buy into this thesis. I think if we were to see early easing of rates, it's going to translate immediately into a wealth effect, pushing up equities, pushing up home prices, probably encouraging more spending. So I have a hard time seeing how that actually helps us kill the inflation bug, if you will.
Point taken there. And I was so excited to speak to you today, particularly to talk about what's going on in the currency. Not something we often talk about on this show, but we have to talk about the yen because it has just been and weakening and weakening, and it seems like nothing will stop it. So I'll just ask you that simple question. What will stop it?
A soft landing in the U.S. What Japan needs is not something the Bank of Japan or the Ministry of Finance does. It's really the dollar. The dollar is the dominant global currency, as you know. And so if we get U.S. growth moderating, so the U.S. is still doing lots of business with Japan, but inflation can come down. If we get that beautiful Goldilocks scenario, the Fed can start easing. That's going to be the best thing to pull down the dollar broadly and help the yen get off these lows. But right now, I think intervention's a risk in Japan, not because it works. We know it doesn't. They intervened at the end of April, and we're back to where we started. But they have to do it for political reasons. The government is incredibly unpopular. They have to be very careful raising interest rates in Japan because of their debt payments on their huge debt to GDP rate. and the economy is still fragile. So they're going to be reluctant to raise rates quickly. That would make the yen more attractive from that point of view. So the only thing the government can do to show businesses and households they're trying is intervene. It's very high profile. It sends a message. But at the end of the day, it's going to give you a better level to sell yen.
Well, you went exactly where I wanted to go, because it seems like a neat solution just on the surface level would be to just raise interest rates. But to your point, that's not exactly an easy thing to do if you're Japan.
Well, it's not an easy thing to do for a lot of countries these days. I mean, we saw what happened in the UK 2022 when Liz Truss tried to increase spending, and that lifted rates, caused a huge sell-off in the markets. We're seeing that in France now with the election coming up, the first round this weekend. The far-wing parties, if you will, talk about cutting taxes, increasing spending. Bonds go up, stocks go down. I think tonight with the debate here in the U.S., I'm sure we're going to get into debt and deficits. We're going to be in that same boat pretty soon. You know, debt to GDP based on the Congressional Office is going to get to over 120% in the next decade. That means if we raise interest rates, our debt service payments take up more and more of our fiscal pie, which means there's less money left over for things like defense, education, research and development. People want those things. And so you have to be very careful about interest rates creeping up when you have that debt overhang. It limits your fiscal room.
Well, it'll be interesting to see if that even comes up in tonight's debate, but that's a different...
We'll see what comes up tonight. I don't know. We're all going to be watching it like this.
Rebecca, always great to see you. Really appreciate you stopping by. That, of course, is Rebecca Patterson. She is former Bridgewater Chief Investment Strategist. Now, we do want to bring you some breaking news, and that is from the Supreme Court rejecting Purdue's opioid pact with Sackler Shield. Now, this ruling, it leaves the Sackler family exposed to more lawsuits. And of course, the case we're talking about pertains to the $6 billion settlement between members of the Sackler family and its bankrupt drug maker, Purdue Pharma. We're going to continue to keep an eye out of any headlines coming from the Supreme Court. But for now, let's take a look at what's moving underneath these markets. We're going to do that with Bloomberg's Emily Grafeo.
Well, Katie, I'm looking at Levi Strauss shares because that stock is falling most on record, down 18% after an earnings miss last night. The revenue came in at $1.44 billion. That was versus estimates of about $1.5 billion. They also reaffirmed their year forecast. So the jeans retailer still sees net revenue up 1% to 3%. So not too big of a miss, Katie, but underwhelming nonetheless. You look at what Wall Street is saying. Analyst Neil Saunders over at Global Data, he said that although Levi's growth looks okay, Wall Street was expecting more given the current popularity of denim. I didn't realize denim ever went out of style, but that's what he said. And the fact that Levi's was up against a very soft comp from 2023 when sales shrunk. So again, that stock down most on record.
So denim, apparently it's popular now. It was popular before, it's still popular, but that's not helping out at all. But tell me about BlackBerry, another blast from the past there.
So this company, I feel like most people know it as the cell phone retailer, BlackBerry phones before everyone had iPhones, but it's now transitioned to a cybersecurity enterprise software company out of Canada, and that stock is up as much as 14% today after their earnings came in ahead of estimates. The revenue was at $144 million for the prior quarter, and that was versus estimates of $135 million. Raymond James said that BlackBerry had a solid start to the new financial year, and we also saw an upgrade over at CIBC to outperform from neutral BlackBerry. So overall, a turnaround story for, again, like you said, this blast from the past.
So that's good news. Let's end with some bad news, and that's, of course, what's going on in Micron shares.
Yeah, it's really incredible just how high the expectations are for so many of these chip stocks, and when they don't seem to post an earnings report that is incredible, we see the stock moving down so much. So Micron, those shares down as much as 6% after their fourth quarter sales forecast fell short of the highest estimates. They see adjusted revenue $7.4 billion to $7.8 billion. The estimate is about $7.6 billion, and the guidance actually came in above the average analyst estimate. But again, for the chip makers here, the bar is just so high, and we're actually seeing a little bit of weakness in NVIDIA shares this morning, probably just off the back of this report. You look at what Stifel had to say While the earnings and the outlook both beat expectations for Micron, expectations heading into the print were clearly elevated. Citi has a more optimistic tone. Their analysts encourage investors to buy Micron on this weakness, saying that the upturn thesis remains intact.
All right, Emily Griffeo, really appreciate that roundup. And we do want to get back to more breaking news from the Supreme Court, the decision coming down that it's curbing the SEC's use of in-house judges in fraud cases, that it backs the right to jury trial for some SEC defendants. With more is Bloomberg Balance of Power co-host Kaylee Lines in Washington. And this certainly seems like a blow to the SEC.
It is indeed, Katie. The SEC uses this in-house tribunal system to hundreds of fraud cases a year, and now that power is going to be pulled back by the highest court in the land. What the Supreme Court has decided here is that those fraud defendants do have a right to a jury trial rather than by the in-house judges at the SEC. And this potentially is removing a key enforcement mechanism. The Securities and Exchange Commission under the chair, Gary Gensler. This will very much change the way in which the SEC conducts its enforcement actions and cases. And this is not the only decision that the Supreme Court has to decide within the next few days as we reach the end of the term here that could affect the SEC. Not only does the court potentially have the power, as they did today, to deal a blow to the in-house judges and the way the SEC does business in that case, we are still a verdict from the court on the Chevron doctrine. This is something that essentially gives agencies, the likes of the SEC and the EPA, the leeway to read law that is unclear in the way the regulators use. If they pull that back, that would significantly restrict the ability of these agencies to do so. Still awaiting that decision. But of course, we got the SEC curbing the in-house use of judges in fraud cases today. And that's not the only one. The Supreme Court also has rejected the opioid pact with the billionaire Sackler that was in control of Purdue Pharma. They, of course, had said that they would give up control of the company and pay a $6 fine, but the court finding today that improperly shields them. The Supreme Court also has blocked the EPA's neighbor ozone rule, and I would remind you, we still have about 10 cases that the court has yet to decide, Katie. And of course, Bloomberg yesterday got its eyes on a yet-to-be-released final opinion that had the court emergency abortions in Idaho. So a lot of news from the High Court here in Washington today.
A lot of news. A lot more to come. I know you'll be all over it. Our thanks, of course, to Bloomberg Balance of Power co-host Kaylee. Now coming up, a package deal. Sonoco inks a deal to become the world's leading metal can manufacturer. We'll be speaking to Howard Coker. He is the company's president and CEO next. This is Bloomberg.
Has the report under Jobs Day, like Bloomberg.
We used to say that everybody needs to become an intelligence.
Are on Bloomberg.
Lost the franchise. Resolution and recovery. Industry likely needs to.
Business like Bloomberg.
Well, the industrial and consumer packaging giant Sonoco announced this that it will buy can maker Eviosys for nearly $4 billion. And joining us now on the news, I'm pleased to say we have Howard Coker. He is Sonoco president and CEO. And let's talk about the logic of the deal. What does the acquisition of a European can maker add to your portfolio over at Sonoco?
Katie, let me start. Sonoco is not a household name, but we exist in just a household in America. So we're a 125-year-old company based here in Hartsville, South Carolina, $7 billion of turnover. And we have some very big brands from a perspective, one of which is our paper can business. So Pringles is the ambassador to that. The Planters, I could keep going on and on. So we did an acquisition about 3 years ago that fit hand in glove with our position on the paper can side. We are the largest producer globally of paper cans. And we did an acquisition in the food and aerosol space here in North America, and it has gone extremely well. We have the integration, the synergies, and most importantly, the market reaction has been fantastic in terms of the customers. So with that background, the opportunity came to us to acquire Eviosys. It was a perfect fit in every way we look at things, from a culture, from a technology perspective, from an innovation perspective. And then you layer on that the financial opportunities were just so compelling. And yes, it will leave us as the world's largest producer of metal food, aluminum and steel containers, as well as a very large position in the aerosol market.
Interesting. So taking that position as the biggest maker of paper cans, now, of course, strengthening your position when it comes to metal cans as well. I do want to talk a little bit about the price tag, because you've had some mixed reaction from Wall Street. There was a note out from Citi yesterday noting that Sonoco seems to be paying about 70% more for Eviosys than what KPS, who you're buying it from, paid for the company in 2021. So why that premium?
Premium is that KPS did a fantastic job in improving the performance of the company. So the EBITDA, the cash flow, the capital invested in the business are reflective of the current valuation. There's a little bit of chalk and cheese there. If you look at the valuation of 3 years ago to where it sits today, it is an extremely fair valuation. And frankly, if you look at the synergy opportunity alone, we're in the 7 times multiple type range. Synergies available to us almost on day one. So the bulk in the first year, and then the rest in the second year of ownership. And what's not captured is the commercial opportunities. Hard to put a value on that, but with the reception that we've received in North America, that there is a strategic, extremely interested, leaning into this business that has a reputation, 125-year reputation of partnerships and taking care of customers. Those we think, again, not quantified in our financial analysis, is the real upside to this as we go forward.
Right, and I hear what you're saying about some of those unquantifiable metrics folding into the valuation. But even still, you take a look at Moody's, they place credit rating on negative watch. So what are your plans to avoid an eventual downgrade there?
We've got, first off, right, Moody's, S&P, those are still investment grade. That's important to us. And we have a clear path to leveraging over the course of the next 2 years, starting with the fact that we have several pretty value assets in our portfolio. Then we were very clear at announcement that we intend to sell some businesses that are great businesses, but just are not a good fit for us strategically, that are in better hands with other owners.
And I just want to broaden out and talk about the industry in general. Of course, you're coming forward with this acquisition, and you take a look at some of your peers, and there's really been a flurry of deal making. You take a look at International Paper, for example, buying DS Smith, and International Paper itself drawing over takeover interest. I mean, what do you chalk that? What is going on in the packaging industry right now?
I focus on what goes on in our 4 walls. and what is important for our team, what's important to investors. And we look at this market, it's a $25 billion market globally. We'll have the largest position. That in and of itself is going to carry tremendous opportunities in terms of how we're able to take advantage of the large market and create growth. So yes, a lot going on in the space, but we're focused on Sunoco, our team members, and this through as a successful acquisition, which it will be.
All right, Howard, hope to check in with you soon about acquisition as it gets integrated. Really appreciate your time today, though. We thank Howard Coker of Sunoco. It's time now for Social Climbers, a look at the stocks making waves on social media this morning. And first up, H&M reporting a 6% slump in June sales. The fast fashion retailer blames bad kept shoppers at home, and the results really mark an end to the honeymoon period for the CEO. Took over in January. Next, changes underfoot at the House of Mouse. Disney announced visitors at Disney World will be able to reserve a space for shorter ride lines up to 7 days in advance. Right now, of course, attendees can only book spots the day of their visit, with many waking up at the crack of dawn for first dibs. Some Disney fans not loving the changes, calling the new system confusing and exclusionary. And finally, we do have Delta opening its most exclusive airport lounge this week at New York's JFK Airport. It's 3 times the size of its Skywood lounge at nearly 40,000 square feet. Now, the Delta One lounge features spa treatments, roaming tenders, soundproof work pods, and shower suites complete with robes and slippers. Access to the club, of course, is exclusive, and you can follow all the latest company buzz on TREN Go on your Bloomberg. Meanwhile, we do want to bring you more breaking news from the Supreme Court, and that is that it will allow emergency abortions in Idaho for now. Remember, we had a preview of this decision yesterday. It was inadvertently posted on the Supreme Court's website, of course, and now we get confirmation again that the Supreme Court formalizes ruling that was inadvertently posting when it comes to emergency abortions in Idaho. Meanwhile, let's take a look at these markets right now. We've been talking about how quiet it is, and that's certainly the case if you take a look at the S&P 500, currently higher by about 0.1%. A little bit more action when it comes to the NASDAQ 100, your big tech stocks currently by about 0.3%, and that rally in the bond market continuing with 10-year Treasury yields currently lower by almost 5 basis points. We are below 430. Now, coming up, the world's largest webcomic platform is debuting today on the NASDAQ, and we'll be speaking to the Webtoon CFO David Lee next. This is Bloomberg.
Saturday mornings, I understand.
Down, so and Saturday, and I start typically by so that have a nice lunch, and then Sunday I would say a culture where I think that if your direction is just too narrow, I'm a better leader than I generally believe I'm a much better.
Well, it's one of the year's highest profile IPOs so far. The online comics platform Webtoon debuting on the NASDAQ today, and shares are indicated to have been at $23.25. That is above the IPO price of $21 per share. Let's talk about this more with David Lee. He is Webtoon COO and CFO. And David, we're going to get to the fundamentals of the business, but let's first talk about this IPO, raising $315 million. What will you use the money for?
Well, already today we see global consumers love the stories we generate from the 24 million creators globally. We'll use this to speed up and deepen the tools we give any creator globally to be a global hit. Many of the stories that you come to see on Amazon Prime or Netflix, the top show on Netflix today, The 8 Show, is powered by our platform. And so you'll see us continue to delight more and more consumers here in the United States and the rest of the world, and invest behind our creators using technology as well as data to inform stories they bring to us.
And I'm always curious to talk to recent IPOs because we haven't seen a lot. There's been a real dearth of IPOs, and I'm wondering why now for this U.S. listing?
Well, our global flywheel took 20 years to create, and if you look at our last quarter results, we're now growing on a constant currency basis 14%. We're driving increasing adjusted EBITDA profitability. This business is poised to really grow in leaps and bounds accretively globally. We thought the world should know about it. Many of the folks here in the United States love our content, but they don't know that we're the ones behind it. So for us, this is not just about capital formation. This is about playing at the global stage and being backed by the best investors so that we can operate globally.
And you can see some of the content on the screen now. So let's go there because it might not be familiar to our audience what we're talking about when we talk about webtoons. It feels like anime and manga, which of course are Japanese in origin, have become popular and are high engagement in the U.S. But what specifically are we talking about when we talk about webtoons?
Well, 75% of our consumers here in North America are below the age of 25. They're the venerated Gen Z. Imagine a digital universe, every genre you can imagine, and maybe a few genres that our 24 million creators created themselves that surprise us. From this weekly flow of fresh, evergreen stories, we use data and AI to know which ones can resonate. So instead of having to use our judgment on what the world wants to see, we use the world to create content that our creators are excited to have consumers explore. So while manga is important, it's a great genre, we have countless other genres that update every week. In some ways, I think of a web comic not as a digital form of a comic. I think of it as a digital storyboard, something that's powered 100 rich film adaptations. The #1 hit on Amazon Prime in January, Marry My Husband. The current #1 hit on Netflix globally today, The Show. All powered by these creators we enable to tell a story that they didn't even realize the world was.
And I'm glad you brought up creators because that's something I've been wondering about. When it comes to the content and when it comes to the content creators on your platform, how do you keep them there?
We have a very unique business model. We can see before anyone because we're the global leader and we have a 170 million user strong base across every country and major languages that we offer. so that we can give a creator the ability to see that they're a hit while they're a full-time professional, a kindergarten teacher. We have examples of graphic designers who don't realize that on our platform they have a story the world wants to see. When they have that story, we share with them as a fundamental part of the business model all of the future revenue they can have as a publisher of their own story. We've given $2.8 billion over the last 6 years to creators, and they know that we're aligned. We're the #1 way for them to go from being an amateur to having a global voice.
Interesting. So it's not just network effects, that they actually get some compensation in some form as well. And I'm curious what the pitch to institutional investors is. If you take a look at your filings with the SEC, it's interesting. BlackRock, for example, purchasing up to $50 million worth of shares. But when it comes to investors outside of BlackRock, how do you explain this to them?
Well, for 30 years, I worked in other businesses, consumer tech, public companies, and transformation. And I always struggled with the idea to investors how to justify being a hit-driven business, how to explain that a human judgment by one of us on a management team knows what to spend hundreds of millions of dollars on a future hit. Instead, when I talk to institutions, they love the data and AI and empowering a global base of creators. Anyone with a Wi-Fi connection on our platform could be the next hit. That source of evergreen content, I think many of us believe is what the world needs, but what the media entertainment is looking for. It's a pretty novel approach to storytelling and one that I think investors are really interested in exploring and supporting with us.
Well, David, before I let you go, I want to talk a little bit about the path of profitability, because you had a net loss of $145 million last year on revenue of about $1.3 billion. When will you be profitable?
Well, if you look at our last quarter, 2024, we posted positive GAAP EBITDA, positive GAAP profit, grew 14% on a constant currency basis, and we have the most interesting, creative, large global markets to continue to grow into. You know, our growth is accelerating here in North America, in places like Japan and Europe. So for us to continue to drive positive cash flow, which we intend to every quarter going forward, it's simply about executing in the largest market, which is, I think, why large institutional investors are beginning to recognize that the future growth is accretive to us, and it starts with our IPO today.
Well, David, congratulations on that listing. Hope to see you again soon. That, of course, is David Lee of Webtoon. Let's get a check on these markets about an hour into the trading day. We'll do that with Bloomberg's Abigail Doolittle.
We're looking at a small gain for the S&P 500 at this point, Katie. Before, in the pre-market, a small loss. So investors still trying to make up their minds. And over the last several days, 3 down days, 2 up days, all small. If this gain holds, it'll be an even split. Now, let's take a look at this VIX. My gosh, that complacency really strongly here. 12 handle. But what's interesting, Katie, in October and November, the futures go sharply higher ahead of the election. So some investors there are gauging for that uncertainty. Another possible measure of uncertainty ahead of the election, using tonight's presidential debate as a proxy. At bonds, they are higher, an overall Treasury ETF, or excuse me, the last 2 months higher, suggesting maybe a little bit of a haven bid. There are other factors that could be at play. Now, if we do to the movers on the day, lots going on beneath that very benign surface. You have coin up 3.4%, helped out by Bitcoin trading higher. Amazon up 1%. Of course, this company yesterday moving above a $2 trillion market cap. Micron, though, not so much. 5.7%. They put up a great quarter in their fiscal third quarter, but their fiscal fourth quarter, the guidance, the mid hits, but there are some analysts that are above the high end of their range. So given the fact that the stock was up 7% year to date into the quarter, some investors viewing that as a little bit disappointing. Interestingly, the weakness, I believe, had to do with traditional business as opposed to AI, but a lot of AI hype and the volatility there. Idea is Micron a tell on the end of it. And then, Katie, we have not seen a move like this for Walgreens ever. This is the worst move, down 24%, going all the way back to since 1980 when this company started as a publicly traded company. They missed earnings by 7.4%. The View, they second time in a row. They're making organizational changes. They are keeping Boots. There had been some thought we're going to spin out that UK unit after merging with them back in 2014, but right now, talking about spending money on that. So investors not liking this message overall. Again, Walgreens Boots Alliance is plunging, down 24%, the worst day ever over the last, call it 34 years.
Yeah, just an absolute wipeout in those shares. Really tough crowd out there. Works Abigail Doolittle, thank you so much. Now coming up, France and the UK are gearing up for pivotal elections. Joe Sitt, he is Thor Equity's founder and chairman. He joins us next to discuss the potential opportunities and the risks for investors. This is Bloomberg.
To encourage people to. What's the thinking? I mean,
be kicked out, right? But because it's easier. Next 5 years, 10. That is a great. What kind of talents to contribute to the world.
Resources. 24 hours a day.
Bloomberg Daybreak Europe.
U.S. markets close. Kickstart the European stories on every weekday at 6 a.m.
Danny Berger.
You need live everything.
Well, it's time now for our Wall Street Week conversation. And earlier this month, Claudia Sheinbaum achieved a decisive victory in the Mexican presidential election. And joining us now to assess her policy agenda is Joe Sitt. He is Thor Equity's founder and chairman, and of course, Wall Street Week's David Weston. And it really feels like markets, of course, are still digesting those results.
Yeah, exactly. Not quite sure what to make of it. We'll find out. So, Joe, really good to have you with us. I must say, first of all, you predicted she'd win. She won. She's now president-elect. But tell us how investors are reacting to this right now. You've said that actually the dollar Mexican peso cross is a barometer of this. If you look at that, the peso is not doing so well.
I think that the market today is in a state of panic because of the unknown. Always the unknown is a little bit worse than even bad known, so to speak. And you do have a couple of reasons for trepidation. You've got 30 days where AMLO, before she comes into the office, whatever he wants because of his control of the Congress. 2, he's looking and she's looking to change the way judges are selected. They did, I candidly feel like a phony where they asked the people, should we change the way it's being elected? And their answer was 70% agrees. But what they didn't say is 80% of the 70% don't even understand the question they got asked. And then last and certainly not least is right now it's a 6-year term for somebody to become president. What nobody's noticing is they changed the law to allow a check at the end of 3 years so that there's a popular vote to say, should we have another election now? And that's sort of like a hammer that AMLO will have to hold over her head. So those are the three things that are giving the world trepidation right now.
And so, of those are the risks, and you can see that translated into the currency market. But as an investor in Mexico, of course, what do you see as the opportunities when you do think about her policy priorities?
I'm excited. I think about business, I think about economics, I think about security, and all three I'm pumped. One is in terms of industrial development. That's one of the biggest demand needs. In fact, the headline I saw inside on Bloomberg was the power grid is going to be challenged. That's really a challenge we've had throughout the AMLO administration, not enough power. And she's committed to bring in the private sector to service that power needs. And she has one wild commitment. She wants to see 100 industrial parks developed within her first year of the presidency. Very pro-business. Second thing I would say is a fellow named Garcia Harfuch. He was her head of security when she was the mayor of Mexico City. And we really saw, while a lot of issues in the rest of the country, or certain parts of the rest of the country, Mexico City's been pretty smooth, pretty well run. And now she's just nominated him to take the federal role. So I think that's a big positive for the marketplace. And then last but not least, Marcelo Ebrard, who's, successful, respected from a finance, et cetera, point of view. He's going to be coming into office and taking that role. So I think three very, very big positives. Probably the big unknown, I know he was saying it as I was walking in and I didn't get to give him my answer, was what happens with the relationships with the United States.
Well, we'll pick up on that specifically because Mexico is positioned in some ways between the United States and China. And the question is that an advantage for Sheinbaum as she comes in, or is that a risk for her?
Okay. I think that she made one of her priorities, people aren't realizing it, keeping a good relationship with the United States. She realizes how important NAFTA is. And yes, while she's from the more left-leaning, so everybody thinks it's only positive if Biden stays in, it's really positive both ways. She's got the relationship there. But what everybody's forgetting is Marcelo Ebrard, who's now got the new finance position, so to speak. He was actually the fellow that put the country's greatest award over the head of Joshua Kushner for making the deal, the new revised NAFTA deal with the United States of America. So I think that she's covering all bets, whether it's a Biden presidency or a Trump presidency. She's prepared for the positive. She's prepared to make good. And I think this is a bump along the way, and it's not the only market that we're seeing bumps, Take a look at Europe.
Look at Europe. Well, before we get to Europe, and I'm glad, of course, you made the point that whether it's Trump or Biden in November, that you feel pretty positive on both outcomes here. But talk to us about commercial real estate when it comes to the Mexican market, because you think about commercial real estate in the U.S. and people are still waiting for another shoe to drop. What's the landscape look like in Mexico?
A lot of things I find globally run cycles. The United States is starting to, outside of the office market, certain categories have run hotter. It's had success over the last decade. Europe and Mexico have been pretty beaten down. And I think that it's a market that will benefit on the way up from global macro, conflict with China, to be blunt, as well as more and more positive relationships with the United States. Who in the world has become the single biggest beneficiary of the conflict between the West and specifically the United States and China? It's Mexico. One of the things that you just brought up, David, was a great point inside. Who's the most active new business signing leases in Mexico? It's Chinese that are relocating to Mexico to get around the issue. So with that massive demand for industrial sites, industrial production shifting from China to Mexico, that creates positive momentum for the economy and for the day laborer, for the for the countries big picture labor markets in general, that positivity, that more income feeds into the system. So I think that all of the domestic side has been benefiting. That'll flow through to I call the business to business real estate market. And then look at the other side, business to consumer, where we're extremely active. We're probably the most active luxury hotel developer in Latin America, specifically anchored in Mexico. We're seeing the business come, tremendously strong from the United States and Canada and even further south. People are loving Mexico for their vacation. People like that, that type of market where you can get away from it all, so to speak. And a weak peso probably make it even better for Americans and Westerners to go there.
So unfortunately, we have to leave it there. Hope to have you back soon so we can talk about France and what's going on over in Europe. That, of course, is Joe Sitt. He is Thor Equities founder and chairman. And David, who else do we have coming up?
Tomorrow we're going to keep it international. Actually, we're going to China. We're going to have Mary Lovely of the Peterson Institute because we have that third plan they've announced. They're coming up with really address economy. She's going to give us a preview of what we can expect out of China and the economy over there. That's Mary Lovely tomorrow on Wall Street Week.
All right. Our thanks, of course, to Bloomberg's David Weston. This is Bloomberg.
Come fix. Is everything.
As the economic picture.
p.m. and 5 p.m. Eastern Time. And about
I mean, this is going to be a
1 and 5 Eastern. Top names in business.
Company needs to think about a company.
Context.
Well, President Biden and former President Donald Trump will come face to face tonight in the first presidential debate. Now, the 90-minute long debate hosted by CNN will mark the first time either candidate has taken to the debate stage since 2020. Bloomberg's David Gura is in Atlanta, where the face-off is set to take place. And David, I actually want to talk about the format. I find it interesting. No live audience, and of course, there's a mute button this time around. How could that change what we're expecting tonight?
Yeah, so it's going to last 90 minutes, as you say. There is this mute button. The way it works is each candidate will get 2 minutes to answer a question. There'll be a rebuttal to the rebuttal. The moderator is prerogative to ask another question or a follow-up question on the heels of that. I think it has the chance to make it kind of really interesting way, because you look at Donald Trump, for instance, who we know feeds so much off of a crowd. This is such a different thing, and even the way that he's prepped for this debate, which is in line with how he's prepared for the last few debates, is to not kind of do mock versions of debates, but to do campaign rallies and, again, feed off the crowd. It's going to be a totally different for them. And then I think that CNN has really studied how the past two debates with these two candidates unfolded. One with Chris Wallace involved a lot of bickering. He had a really difficult time keeping the candidates on questions that he'd asked. I think that they've watched a lot of tape, and suffice to say they're going to try to do better at kind of making sure that they get substance out of these two candidates.
Yeah, it will be fascinating to see if they're successful with that. And let's talk a little bit about the substance. I mean, what are we expecting the real message, the takeaway to be from tonight?
I think that both candidates, it's incumbent on them to talk about their future, the vision that they have of the future. Trump likes to talk about what happened 4 years ago and before that. So I anticipate he'll be pushed for the future. How clearly he can articulate that, how clearly that Joe Biden can articulate that as well. And then I think there's this topic that you're hitting on, I think, Katie, which is how much does substance matter versus style? There are so many questions about what these two candidates are going to look like individually and on stage together, how they're going to interact, how they're going to interact with the moderator, and how they address questions about their capacity to return to the White House for another 4 years, to do with age and temperament and all sorts of things. So we'll see sort of how head-on they address both those things tonight when they debate.
And David, I mean, before I let you go, how much do debates actually matter? When you think about the polling right now, Trump, of course, leading Biden, I mean, how much do debates actually move the needle?
It's a great question. I just talked to Rob Portman, the former senator from Ohio, who played the role of a lot of Democrats and Republican debate before. And he said what's fascinating about this one is this debate is really catering to about 100,000 people in 7 states across this country. The sliver of those who haven't made up their minds and could be swayed by what happens on this debate is very small. And his counsel to me was watch this debate with them in mind and sort of see how these candidates, that again, very slim part of the electorate.
Well, David, good luck tonight. That, of course, is Bloomberg's Dave. And you can tune into Bloomberg Television and radio. We'll have all the build-up and post-game analysis, as well as simulcast coverage of the CNN presidential debate tonight. Bloomberg's coverage begins at 8 p.m. Eastern. Now, before we let you go on this program, let's take a look at some of the stocks hitting highs and lows today. And we start with Amazon, hitting a 52-week high after reaching $2 trillion in market valuation for the first time, thanks to the AI-fueled rally. You can see adding about 1% on the day here. Let's also talk about Arista, also hitting highs. That's after Citi raised its price target to $380 on the cloud computing company, up about 4.2% today. So that's good news. Let's get to some really bad news, and that's what's going on with Walgreens right now, hitting a 52 low and then some after it slashed guidance thanks to a worsening retail environment. Now, store chain said it would also close significantly more stores. It also expects headwinds to persist into next year, of course, down about 25% right now, just a real record wipeout. We'll see, of course, if that changes as the new CEO's plans start to take hold. But otherwise, it's a pretty quiet day in the market. Probably helps that Amazon, of course, is hitting that 52 high. Now, coming up, the CFO of Block joins Bloomberg Technology with Caroline Hyde. Ed Ludlow coming up next. But that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.